So if you've been following Capstone Copper at all lately, the headlines are all about one thing: labor disputes. But you know, that might just be the surface noise. Today we're going to dig a whole lot deeper, based on a really fascinating analysis of what the company's long-term strategy actually is and the absolutely explosive market it's in right now.
So let's just start with the big question right up front. A strike at a flagship mine? I mean, that's a classic red flag, right? It creates uncertainty, it can hit production, and yeah, it definitely spooks the market. But is that really the whole story here? Or is it maybe just a distraction from something much, much bigger?
And this just captures the two ways of looking at this perfectly. You've got the tourist investor. They see the headline, strike, and they sell. They just want to avoid the risk. But then you have the trader, that's what the source material calls them, who looks at this temporary disruption and sees something else entirely, a potential discount, a chance to buy into a huge story that maybe the rest of the market is overlooking.
All right, so first things first, let's actually break down this disruption. What exactly is going on at the Mantoverde mine? And, how big of a deal is it for the company as a whole?
Okay, so this gives us some really crucial context. Yes, there's a strike, but look closer. It's by just one of 4 unions. And that union? It represents only about 1/5 of the workforce. Meanwhile, the other 3 unions already signed long-term deals, and management is still keeping a pretty significant chunk of production online. This frames it less like a company-wide crisis and, well, more like a localized and probably temporary issue.
But here's the thing, what's happening at this one mine, it doesn't exist in a vacuum, right? We need to zoom way out and look at the powerful economic backdrop here because it is fundamentally changing the game for every single copper producer on the planet.
I mean, just look at that number. Over $12,500 per metric ton. That works out to about $5.70 a pound. Wow! These aren't just strong prices, these are record level, signaling an absolutely roaring market for copper.
Prices like this don't just happen out of nowhere. They are the market screaming that there is a fundamental imbalance. Global demand for copper is just way outstripping the world's ability to supply it, and that creates an incredibly powerful tailwind for a company like Capstone. So, this all brings us to the core thesis of the source material. If you look beyond the short-term noise of a strike, the real argument for Capstone is built on 3 really distinct pillars that define its long-term future.
And this is the foundation it's all built on. Let's be clear, this isn't some one-trick pony. They're diversified all across the Americas, from a stable operation in Arizona to these high-margin mines in Chile and Mexico. This kind of setup gives them the stability and the multiple revenue streams they need to pull off their ambitious plans. So here they are, the big 3, the pillars of the long-term argument. A super clear and aggressive path to growth, a unique strategic advantage they call district synergy, their secret sauce, and a management team with a proven track record of smart execution. Let's break these down, and let's start with that secret sauce.
Okay, so this district synergy concept, it's pretty central to the whole story, and it's actually really, really clever. What they're doing is taking 2 massive mines that are super close to each other and building shared infrastructure. We're talking power, water, processing to create one giant, hyper-efficient complex. This is a perfect example of smart management at work, seeing a huge opportunity to create value where others might just see 2 separate mines.
And this isn't just some nice idea on a PowerPoint slide. This synergy is projected to slash their operating costs by $80 to $100 million every single year. That is a permanent boost to their bottom line, unlocked by some really smart, forward-thinking design.
Now let's connect that insane efficiency to that first pillar we mentioned, growth. See, while a lot of mining companies are kind of struggling with aging assets, Capstone is on a completely different path. And this district synergy plan is a huge part of what makes it all possible. I mean, just look at these numbers. They're transformative. The company is on a path to nearly double its copper production in just 5 years. This isn't just a little bump. This is a fundamental change in scale that's going to move them into a whole new league of producers.
Of course, producing more stuff only matters if you're actually making good money on it. So you might be wondering, how profitable is each and every pound of copper that Capstone is set to produce? Well, let's connect the dots. First, let's just remember the selling price. As we saw, copper is trading at historic highs, right around $5.70 a pound. That's the revenue side of the equation. Now for the other side of that equation. Thanks to their efficient operations and these really smart strategic plans like the district synergy, their projected all-in cost to produce 1 pound of copper is only about $1.75. That is an exceptionally low production cost in today's world. So you do the simple math. You're selling for $5.70, but it only costs you $1.75 to make. That leaves a margin of nearly $4 for every single pound of copper they pull out of the ground. That is a straight-up cash-generating machine.
So when you put all of this together, the growth, the efficiency, those incredible margins, you can see that Capstone is pushing toward the final phase of its transformation. It's about more than just getting bigger. It's about fundamentally changing how the market sees and values the entire company.
Let's just walk through the road ahead here. You can see the current strike is just the very first, very temporary item on the list. The near-term thing to watch is its resolution. Then, the big one is the final investment decision on the Santo Domingo project later this year. And then, ultimately, it all leads to that massive production target in 2030.
And this quote from the analysis, man, it just sums up the stakes perfectly. Hitting that 400,000-ton target isn't just about a number. It's the ticket to being talked about in the same breath as the global mining majors.
And here's a final, really critical point. Unlike some of the diversified giants who mine all sorts of different metals, Capstone is a pure-play copper story. Over 90% of its revenue is tied directly to the price of copper. So what that means is, if you believe in this booming copper market, Capstone offers one of the most direct ways to be a part of that trend.
Which leaves us with this one central question, doesn't it? Is the wider market getting totally distracted by the short-term headline of a localized strike, while completely missing the much larger story of a company that is on the verge of doubling in size with incredible margins right in the middle of a historic copper boom? Well, that's the story beneath the noise.